All right. Good morning, everyone. It's 9 o'clock. We will officially bring this meeting of the Audit and Finance Committee to order. Welcome, everyone. Thank you for taking time out of your day this morning to join us. Looks like the first thing we have on our agenda is the acceptance of the minutes from the May 2nd meeting. You all should have received those a few days after that meeting. At this time, I will entertain a motion to accept those minutes.
Doretha Brooks, I move that we accept the May 2nd, 2023 minutes for permanent record.
Awesome. I have a first. Do I have a second?
Second.
We have a second. All in favor indicate by saying aye.
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 All those opposed? Minutes pass unanimously. Thank you, everyone, for that. The next item on our agenda is we have some introductions, and Carol has graciously agreed to do those, having a little bit of background. So, Carol, you got the floor.
Thank you, Travis. First of all, I would like to introduce Mr. Sal Tropia. He was appointed to the Audit and Finance Committee by the school board on June 13th. He was nominated by school board member Justin Sharpless to fill a vacancy in District 6, formerly held by Matt Beeman. Mr. Tropia is a senior audit and tax manager at Bunting, Tripp and Ingley since 2006. He has over 15 years of experience in public accounting, specializing in audit, taxation, and consulting services for a diverse set of industries. He has a proven track record of implementing audit efficiencies. Mr. Tropia is a CPA and has an MBA and bachelor's degree in accounting from Southeastern University. Mr. Tropia serves on the board of directors at High Point Church of Lake Wales, is a past president and member of the Rotary Club of Lake Wales, and is a graduate of Leadership Lake Wales. Mr. Tropia, welcome, and please say hello and a brief introduction, if you will, please.
Thank you. I appreciate it. It's an honor to serve on the board, and I couldn't have done a better introduction of myself than you, so appreciate that. Originally from Virginia, came down to go to Southeastern University, graduated with my accounting from there, and then years later went back for my MBA, and I've been with Bunting, Tripp and Ingley since 2006. Got my CPA in right about 2010, and just look forward to being a good member of the team here. So it's an honor to serve with you all.
Thank you so much, and we are glad to have you. Next, we would like to introduce Mr. Luke Whitty. We're happy to announce that we hired Luke to fill the vacant position of Assistant Director of Internal Audit. He's been with us a couple of weeks now. He actually transferred from Assistant Director of Accounting position with Polk County Schools. So he's actually kind of doing both jobs right now. He's still helping accounting through the transition. Luke also graduated from Southeastern University, and he brings 7 years of governmental experience and supervisory experience to the job. And obviously he's familiar with our SAP system. And so we're very happy to have Luke. Luke, would you like to say hello?
Yeah, thanks, Carol. It's a pleasure to be here. Like Carol said, I've been with the school district for about 7 years, and accounting for 4 of those years. So I became, very familiar with our processes and procedures and what our books look like, and how to prepare our annual financial reports. So all aspects of the reporting wise, very familiar with, and got to work with Carol and Jennifer on the internal accounts audit for all of those years. So familiar with the auditing piece a little bit as well. So yeah, I'm excited to be here, part of this team as well, and just learn, from Carol and others as well in this new role. So thanks.
Awesome. Well, welcome, everyone. So moving right along, it looks like our next item is we have Ms. Christensen from Carr, Riggs and Ingram, and she's going to give us an update on the incoming internal funds audit. for the fiscal year that just ended.
All right, thank you, Travis. My name is Jennifer Christensen. I'm a partner with Carr, Riggs & Ingram, and we are the auditors that audit the internal funds for Polk County schools. And just to kind of give a little bit of background, the internal funds are the student activity funds, where the students are the ones that are raising the money, whether it's through fundraisers, field trips, prom tickets, football tickets. And so those are the types of funds that are running through these accounts that we're going to be auditing. So a little different than like the state funds that come down. This is all just raised internally at the schools. And so I'm going to go ahead and start my presentation. So first, I just like to go through a little bit of a timeline of the audit. And so we always have a meeting with Polk County Schools, and that would be with accounting and internal audit. And so we had that meeting on June 29th. And then during the month of July, we did our audit planning. We picked all of our samples and went through all of the processes and procedures to document any changes that we may have had. And then we'll actually be doing our audit field work the week of August 14th. And so we'll be doing that out at the district office. And then the plan is to be able to submit draft financial statements and reports to the district around mid-October, with the plan of issuing the financial statements in mid-November. And that, of course, would all depend on sometimes with the group auditor, the district-wide auditor, there are certain times where they want us to wait to issue our report. But if everything goes as planned, mid-November is when we would be issuing the audit. As far as our responsibilities when it comes to the audit is, our responsibility is to express an opinion on the financial statements and whether they're materially stated in accordance with what we call GAAP, which is generally accepted accounting principles. And so in order to do that, we're going to do two different types of testing, really. The first one is substantive testing, which is what we're going to, the audit test that we're going to perform on the cash accounts, the accounts receivable, the revenue, the expenses. And then we're also going to be obtaining an understanding of internal controls and performing a walkthrough of those internal controls. And that's going to include the IT general controls also. And then lastly, we're going to do a lot of compliance testing. And this is probably the bulk of our audit testing that we do. We do compliance testing to make sure that the schools are following the school board rules, the laws that the Florida Department of Education has, and then the different policies and procedures that Polk County Schools has for their internal funds. And that testing is going to be performed on every school in the district that has an internal fund that had activity for the year. Next, we have the school district's responsibility. So management and those charged with governance, which would be the school board, their responsibility is to oversee the non-attest services that we provide. And what that is, the services that we provide outside of the audit is that we prepare the financial statements and the footnotes. And so management and the school board would be responsible for overseeing that service. And what that means is they'll take responsibility for the financial statements. We'll prepare them and we'll submit them to management, and they'll review them and they'll approve them before we issue them at the end of the audit. And then when it comes to Heather's and Align's team, they're going to be helping us by pulling all the information we requested. So we gave that to them a few weeks ago, and I'm sure it's probably pulled already. The team is great. They know exactly what we need, but we do request hundreds and hundreds of items. And so so that team really puts in a lot of work to pull that information for us, the reports, and then any questions we have during the audit, that would be our contact, would be the accounting and finance department to go to for any inquiries we may have. And then a couple other things. One thing our professional standards require that we communicate with those charged with governance what our possible risks are that we identified during the planning phase of the audit. So Two of these would be management override of control. That's always a risk that my auditors have to consider when they're performing audit procedures, and improper revenue recognition due to fraud. Again, this professional standards just are going to presume that these two risks exist in every organization, every entity. So those are going to be two standard ones that we have for every client. And then the third one we have is the cash collections. Because internal funds, you do have cash that's still being collected where students are turning cash into teachers. Teachers are then turning it into the financial secretaries, and then it's being deposited into the bank. So there is a risk there that that cash collections may not be properly safeguarded, that there could be misappropriation of cash. However, a mitigating factor of that is that when it comes to internal funds, if there was cash that was missing, it would likely be a very small amount, because again, if they're collecting for a field trip, it may be, you know, $50 total that they're collecting for the day, $100. So it would definitely be immaterial to the district, but it's still a risk that that we have. And so when we look at these risks that the district has in internal accounts, we then customize our procedures to address these risks. And so some of the compliance testing that we're doing, we're going to be kind of addressing some of those risks. And again, we do a lot of compliance testing on the receipt side, on the disbursements, on fundraisers, contracts. And so, so that would be how we would address those risks. We are considered what they call a component auditor. And what that means is that there is the district-wide auditor would be considered the group auditor. And they're going to take the results of our audit and they're going to include them in their financial statements. And so our standards require that we communicate with the group auditor on certain matters. If we came across any fraud, definitely we would, we're required, if we come across fraud that's material, we're required to communicate that, of course, to those charged of governance with the school district, with management, but we also have to communicate it with the group auditor who's auditing the district as a whole. If we have any audit adjustments, if we come across any related party transactions, we would have to communicate that with the district-wide auditor. And then lastly, I always like to kind of ask the audit committee if they're aware from their exposure to internal funds, if they're aware of any fraud that may have occurred during the year regarding internal funds, or if there's any concerns, any maybe discussions that have been held about any areas where there might be a lack of controls or concerns about the policies and procedures, or maybe a lack of a certain type of process or procedure when it's in relation to internal funds. So I wanted to kind of take a second to ask the committee if they're aware of any such items. Okay, and so I also asked these inquiries of internal audit, Carol and her team, and also in the accounting department. So, and then I will be talking with the chair of the school board. So I will be asking these questions of different people. And then here is my contact information. If there is anything you would like to reach out to me to talk about, please feel free to give me a call or an email. Either way would be fine. Any questions? And that's my presentation. Thank you so much for giving me some time this morning during your meeting to be able to present this audit.
Awesome. Thank you so much, Jennifer. We appreciate you.
Sure. Thank you.
All right. Next, we have the finance update. Who's jumping on that first?
Good morning,
Mr.
everyone.
Nunez, thank you, sir.
Yes. Sorry, it was just a glitch there, unmuting. I'll start off presenting a few items, and then I'll turn it over to Heather, who's going to talk about the upcoming budget for 23-24 school year. So let me go ahead and share my screen. There we go. So I'll start with the May financial statements, which are the most current ones we have. We've closed June and we're in the process of our year-end entries for the year to prepare the AFR that has to go to the state by September 12th. So the official month of June is closed, but we have what we call period 13 open, which is where we do all our year-end entries to prepare the AFR to go up to the state. So these are the May financials. Like I said, the most recent ones that were done. I know Mr. Tropia yesterday emailed some questions and I had to go back and make some revisions regarding some of the fund balances between the balance sheet and the statement of accounts for each of the fund categories. There were some updates I needed to do. Some of the fund balances in the individual categorical funds that we keep did not agree. There were some year-end payroll corrections that were still pending that we had to manually project for and had not posted yet. Additionally, there was one cell where the link was broken, so the beginning fund balance for the year that had carried over for the general fund in the previous presentation did not reflect what it truly was. So here we have the balance sheet for May. First page is our asset accounts. As you can see, we've presented this before. We break it up between our governmental fund types, our general, special revenue, debt service, and capital projects. We then have our internal service fund, which is our health insurance fund, where we're self-funded. And then our fiduciary fund types, that's our internal accounts. On the liability side, you can see where we end the fund balances down here for each one of these columns. That's what was not agreeing yesterday. And I've gone ahead and made those updates. You'll see that reflected on the next page where we have a summary. As I've stated before to everyone, these financial reports that we've been generating, we've just been mimicking what had been done in the past. Since my starting in October, I've reached out and requested if you guys have any other way that you'd like to see this presented. If it's too much, if it's too little, if you want to see specific data presented, please reach out to me, let me know. I know we did add an extra page that you all had requested where you wanted to see a comparison of salaries and benefits and compared to prior year by category, and that page is included on here. So this is our summary for our major fund categories, our general fund, our special revenue funds, which consist of our food service and all of our other state and federal grants, debt service, capital projects, our self-insurance fund, and the internal accounts fund. Over on the right is our ending fund balance for the month of May. I know the board usually likes to know what the ending fund balance for the year is going to be. Our unassigned fund balance for general fund is always a big talking point. The board actually has a policy where we want to end the year above 5%, at or above 5% every year. When we get to that page, I'll explain where we're currently projected to end at for the year. Here's an overview of our general fund. We still have about 16% budgeted revenue still remaining that we have not, where we originally budgeted for and we have not received yet. We have received to date $921 million, almost $922 million in revenues. Our expenses have totaled to $959 million, putting us at a deficit of $36 million for the year. Our beginning fund balance in July was $113.7 million and ending the month of May at $77 million. This slide here just shows a table of all of our major fund categories and showing the revenues we've collected versus our expenses and then our ending fund balance. And you can see on the general fund, we obviously have come up at a deficit, but that's usually because of our categoricals that we are restricted to. Our general fund revenues compared budget to actual through the month of May. Obviously, the majority of our revenue comes from our state sources, from our FEFP dollars. And then we have our local sources as well, our local property tax that we receive. This pie chart here just shows our expenses by function for the general fund. Obviously, instruction being the biggest piece of the pie there at $647 million. And school admin and pupil transportation are our next largest ones. Obviously, student transportation is always a big expense here for Polk County. We have such a vast area to cover, and usually has to be subsidized from the general fund. We do get transportation dollars from the state, but it's never enough what they actually provide to fund our district. Here's the general fund comparison current year to prior year. You can see in revenues, we are at 12% above what we received last year. Obviously, more students this year than the prior year. So our FEFP dollars have increased just because of our FTE, our student count. Also in local sources, obviously with property values going up, we're seeing an increase year over year. How long the market's going to hold like that, we're not sure. But for right now, the last few years, we've seen those property taxes come in higher, not only because of the valuations, but also just the amount of new properties coming into the county. Oh, sorry. Our expenses are 9%, almost 10% above last year. Again, more students, more expenses, and obviously, as everyone's aware, everything costs more, it seems, every year. So when you do that comparison to last year, you can see the increase there. Our fund balance, however, you can see is at a better position than it was last year. I'll explain that when I get to the fund balance page, why that is. Here's just another presentation showing our general fund expenses, but this time by function. You can see each row that represents the categorical functions that we use to follow the state's guidelines and their red book, instruction, pupil services, and so on. We code it according to what the majority of the function being paid for is related to. Again, just another chart showing salaries, obviously, as our biggest expense. And then this is salaries by function. So this is just exclusively showing this chart here from the salaries, but breaking it down to function. And obviously, as a school district, our biggest expense is always on instruction, our teachers and our instructional staff. This was one of the tables you had requested the last time we met. This is showing just out of the general fund, and it's comparing the classification of those expenses year to year compared to last year. Whereas in the other one, we just show, as you can see on this one here prior, where we compare year to year, it shows the expenses by function. This one shows it by the category. So salaries, not necessarily instructional, but just salaries across the entire district. And you had requested that, and you can see our salaries compared to last year. This time last year, up almost 5.5%. Our benefits up as well. Across the board, everything up as we showed before. With the salaries, obviously, minimum wage going up, more employees, higher wages to keep up with inflation and raises that were processed by the board. So here's our general fund fund balance comparison. This is the sheet that just shows the projection as we go month to month for what our ending fund balance is going to be for our unassigned fund balance. That's the one that the board has a policy. They like to see that above 5%. You can see in May, we had a projection of 4.87%. It's been going up obviously every month, and it can fluctuate depending on actual expenses that occur. However, I checked with budget yesterday, and now that we're in the process of doing year-end entries and closing the year, they're calculating that ending fund balance is going to be anywhere between 8 to 8.5%. They haven't shored up that number yet. That primarily, as you can see in the prior year, we ended at 9.4%. Somewhere between 8 and 8.5% is going to be where we're really truly going to end the year. That the majority of that has to do with the availability of all the federal dollars coming through, all the COVID funding, the ESSER funds that we've had, and the ability to reclassify a lot of the expenses over to those grants. Eventually, those grants will go away. I know there's been talk, I've heard talk through the news where the federal government is considering reeling back some of that unspent money that a lot of states and cities and local governments have received. We don't have anything definitive that has been said yet, but that has been the biggest driver these last 2 years in that unusually high ending fund balance for the year. So the next few pages is just the remaining categorical funds that we keep. So here's our capital projects fund, where we fund all of the construction of new schools and maintenance and expansion of schools. As you're aware, the county continues to grow, and we've had to continually build new schools pretty much every year. Here's a comparison with last year. Our revenues are down 13.4%. Our expenses are up by 26%. Some of that revenue being down, you can see, is from our local sources. So with impact fees that we receive from the county, several years ago, the county changed their process for that money being funneled to the school district. Many years ago, it was just, I believe, a quarterly payment. They would collect the impact fees, and once a quarter or twice a year, they would just send the payment over. Not so anymore. The school district now has to formally request those dollars when projects come up. So they want to see what the plans are for that money before they release it to the school district. So I know we received some money prior year. You can see we had submitted for that. I know it's in the works now to go back to the county and with future plans for new schools that are going to be necessary to request more money from them. So again, the majority of our money for capital projects does come from LCI, that local capital improvement that we get through impact fees and the property taxes. Again, the expenses by function out of the capital projects, you see more than half of it is transfers out to the general fund, just because we a lot of times have to wait on that funding to come in. So it's being paid for out of the general fund, and then as the money comes in, we transfer it back to the general fund to make the general fund whole. Our special revenue funds, you can see our revenue is lower than what we projected. Again, there's just a lot of available money through the ESSER fund still. And obviously with that money being through a federal grant, it's restricted to how we can use it. Again, we've been able to reclassify a lot of expenses over to it, but there's still money remaining there. And hopefully we're able to make use of that money before the government decides to reel it back in. Again, showing here the majority is federal. that is funneled through the state, but just because a lot of that ESSER money and again, Title I and those big grants that we get every year that are federal programs, but they are managed through the state. Our special revenue expenses by function, again, the majority instruction and obviously food service for our food service funding that we get. Here's our special revenue expenditures. By the detail, you can see food service, obviously, a big part of that budget, and that money is restricted for use in food service. So last through May, we had spent $64.5 million on our food service. A big majority, obviously, is for instruction. A lot of Title I money that we get that funds a lot of our teaching positions as well. Expenses by classification for our special revenues, again, salaries being the largest portion because a lot of that Title I and ESSER funds that we were able to apply some instructional time to as well. Here's our special revenue funds, again, compared last year to current year. Our revenues are down. We did manage to spend more on the ESSER side last year. There was some availability too for capital projects that were funded through ESSER as well. And our expenses just slightly down compared to last year. And some of this on the revenue side, a lot of times it's just the timing. We have to wait till the month closes before our budget department does their drawdown process from the state to get reimbursed for the grant expenditures. Here's our debt service fund. Our revenues up by 6%, but then our expenses also up by pretty much the same amount. And then a comparison to the prior year. You can see our ending fund balance increasing. We do have a sinking fund for one of our long-term bonds that is going to come due in a couple of years. So we do have a sinking fund in place to be able to be prepared to pay that off when that time comes. And then this is our self-insurance, our internal service fund. Usually the presentation is a little different, but when I was revising these, I ran the same report that I run for the others, as it's a little bit more accurate and more in line with the presentation of the other funds. You can see our deficit this year through May is about $7.8 million. We had a $15.5 million beginning fund balance for the fiscal year, and ending right at 7.7 for the end of May. I know last year and the year prior, the board did increase contributions for our health plan. Obviously, we have the actuaries that come out every year and present to the board. I know they are getting ready to do that here in August or September in order to present to the board what the status is of the health plan and their recommendations regarding any board contributions or any employee contributions that may be needed. So any questions on the financial statements or any suggestions as to alternate presentations you would like to see or data you would like to see presented? I will say it's 26, 27 pages long. I have been researching and comparing to some of our neighboring districts and other large districts in Florida to see some of them, their monthly financial statements are as little as 6 or 7 pages. So I want to find that fine line where it's good quality data, but not just quantity that is overwhelming and just kind of goes over everyone's head, or financial data, as I've said before, is not usually the most entertaining data to present. So again, I'm open to any recommendations or suggestions on any way the committee would like to see some of this presented in the future.
Speak now or forever hold your peace.
With that, I'll move along to our investment portfolio that our Our investment advisors are Deep Blue. They're the ones that manage the investments for the district. This is the statement as of June 30th that they submitted to us last week. There's a few pages at the beginning. They always place this there where they talk about current market conditions and their forecast for the future. I just wanted to present and focus on a few of the pages from their statement. Here you can see this is our investment balances showing where the district has their money parked for the meantime. You can see the total at the bottom, and you can see in this column here how liquid that is. So obviously this number here is a very large number, but the cyclical nature of the school district is this district receives its tax money starting in November every year. That money starts to come in, and obviously we want to invest it and put it somewhere where it's safe and can gain a good yield for the district. But this time of year, tax revenues slow down. Obviously, the tax collector has collected the bulk of it. We've received it between November and January. Sometimes in February or even March, we may get a payment come through. But now during this time of the year, through October, November, December, that's when for our cash flow, we will begin to draw down on some of these investments. So we've already started to draw down for the month of July. We had to draw down just to meet our cash flow needs. And that's not atypical. It's the cyclical nature of the school district that we have to contend with. So we're always making sure that we have enough liquidity while also putting some in accounts that are going to give us the best interest return. You can see here the majority of it is in the Florida Fit cash pool. That is a cash pool that is very liquid. We can draw down within a day if we need to. Up here in the lighter green and purple combined, this is our impact fee fund. So when we do receive that LCI money from the county, obviously those projects can take months or years to complete. So we want to invest that and then draw down as needed. We spend out of the general fund and then we draw down and transfer it over to make the general fund whole. And this next page here shows the compliance of the district's investments according to the district's policy. So this column here will show the current allocation in each one of these types of investments, and then what the board policy that was revised a few years ago allows for in each of these types of investment types, and then whether it's in compliance or not. You can see they're all in compliance. And then the next item I wanted to speak to, this is our sales tax revenue bond as well. We have a different account that we invest that in as well in order to keep those funds separate from the other investments, since that money is a restricted use as well. And the final item I wanted to present, you all should have received a copy just to make the committee aware that beginning July 1, we changed the threshold for our asset dollar value. Before, the district's asset threshold was $1,000. So anything above $1,000 was considered an asset and would be capitalized. We've increased that to $5,000 in order to, number one, meet the school board policy. So back in 2013, the school board actually adopted a policy that says the district will mirror whatever the state's asset threshold policy is. So through some research, we found that back in July of 2020, the state increased their capitalization threshold to $5,000. So we've done that to meet that part of the policy, as well as to keep up with just inflation. With inflation, everything going up, more and more things are getting capitalized and becoming an asset, which means there's more assets to track on our property accounting team. But also the other catalyst was the fact that the district went one-to-one with devices for the students. So in the past, we would use our ERP system, which is SAP, to track technology devices. Even if they were under $1,000, they weren't necessarily considered an asset, but because they fall under the classification of an attractive or desirable item, we were able to use SAP in order to assign them an asset number and track them that way. It worked for many years because at the time, the only devices we were tracking were devices that were assigned to a school or staff devices. And obviously, we have staff listed in our SAP ERP system. Once the district switched to one-to-one for students, it became a real challenge because we do not keep student data in our ERP system at all. So the tracking became a two-part process where we were tracking the device itself in SAP to a location, but then there was a secondary layer that had to be added to track those devices to the individual users. So working with our IT department, that also, like I said, was a catalyst for moving forward with this change. We've now changed to where all of the technology related items are being tracked through IT through a new software that they've acquired called Incident IQ. It works in that it has real-time data. They can track down to the user. They can track the IP addresses where these devices are connecting to the district's network. And it's just a much more efficient process to track the devices that way. We still obviously purchase them and pay for them out of SAP. We assign them to a cost center or to a fund, but then once that process takes place, it's turned over to IT and their system, which our property accounting team has access to as well. So when they go out to audit our assets, they are also doing the inventory on these, since we can't have the network managers at the school do the inventory since they're the ones responsible for the devices. We need someone else to come in and do the inventory as well. And finally, well, I'm sorry, is there any questions? Or
I have a question, just to clarify, this is
Yes.
for all of the computers, all of the IT equipment issued to staff as well as students.
yes,
Okay.
yes. Additionally to part of the reason for the change in the asset threshold also correlated with the P card usage as well. So before, we had a transaction limit of $1,000 for P cards. So now, to go in line with this policy change, the purchasing department has been able to increase those transaction limits. So that was in place to avoid anyone using the P card to purchase an asset, because if it was a true asset, we needed it to go through a different route in SAP so we can assign it an asset number and track it. But with them now having the threshold increased to 5,000, it's also creating a better efficiency where they're not, these department or P card users are not having to reach out as often for a credit limit increase like they were before if they were paying for something that wasn't an asset but it was above $1,000. So a field trip or a conference with multiple attendees, they were having to constantly reach out to the purchasing department to have those limits increased. So this will also help on that end as well.
Another quick question.
Yes.
With all the assets that are currently on there under 5,000,
Yes.
are they going to get cleaned up, or are they going to remain on the balance sheet?
Yes. No, we are going to retire those
Okay.
once we get our year-end entries done. And once we're comfortable, then IT's comfortable that all the data that's in their system correlates to what we had previously in SAP. We want to keep it there for a few months just to make sure. But yeah, at some point, either in September, October, we'll begin to retire some of those that are under the $5,000 new threshold now.
Okay, thank you.
Yep. And then finally, I wanted to give an update on the fiscal year 21-22 audit that is still not finalized. Heather and I have been working with CLA, the external auditors who are performing that audit. They had given a tentative finalization date of August 4th. I believe it was a few weeks ago when we set that timeline up. It looks like we're on track to meet that deadline, which is Friday. Currently, the audit report is up at their national review. We've gone back and forth the last 2 weeks or so with some drafts of the ACFR, and that's where it stands right now. It's in their hands, being reviewed, and hopefully we'll have it by this Friday. Afterwards, we need to then submit it to the board, as well as submit it to the committee. So with that, if there's any questions, if not, I'll turn it over to Heather.
Hi. I was taking notes while Alon was talking, so I have a couple things I want to add before we get into the budget. First and foremost, I want to say that I'm very proud of the accounting team and the work that they've done. We had a significant turnover a year ago, and Alon had been with us before in budget and had gone off to pursue higher levels, and we're fortunate that he came back with us. We also have a director of accounting named Lauren Hinton, who came from the Department of Health, and Luke Whitty was our assistant director of accounting. We did a reorg, and the team has, under Alon's lead, has redone our financial statements. They have worked to start to improve processes. We have a lot of outdated processes in accounting, a lot of manual things, and Alon's also brought the team together so that they're all working together, and it's a really good environment. So I'm excited to see where we're going from there. He mentioned the audit. Due to our turnover and then also a turnover on Clifton Larson Allen's side, it was part of the delay. One of their auditors was actually working out of the country, so our portion had been postponed for a few months. We've spoken with the Joint Legislative Audit Committee, the Department of Education. Everyone's on board and understanding, and we've set forth a new timeline for this upcoming year to ensure, now that we're fully staffed and they're fully staffed, that this doesn't occur again. It's a very stressful situation for all. Alon mentioned ESSER. So we do still have ESSER 2 and 3 grants. Those will be sunsetting in September of 2024. One of the things, a lingering remnant from COVID, is we have problems filling our vacancies. So we had a significant amount of teacher vacancies last year. And what we've done through ESSER is we've reimbursed the district for substitute costs, and also we do something called an all-day teaching assignment, where we add an additional hour to those teachers that wish to teach to cover their vacancies. And we also sometimes cover class periods with Paris. So that's the biggest chunk of what we've reimbursed, which drove the fund balance up. I think that covers most of it. The P card spend too, we also have our purchasing department, along with accounting, is looking into our guidelines. We have the possibility, as a government entity, we don't have a lot of leeway to gain revenue other than what's state appropriated. So we're working on that to enhance things that we can purchase in a controlled environment to increase our P card revenue, and then also looking into e-payables, which will also give us a rebate. So we have lofty goals. With that, I will get into the budget. I'll share my screen. Y'all have to forgive me. I have so many things open that I look at daily. Okay, are you able to see the budget resolution? You'll see a highlighted amount. On that, our budget for this year is $2.5 billion. Last year it was 2.4. This is just an example of the resolution that we show the board. I have several things to show y'all. This is our millage resolution. So our required local effort, which is the amount we're required to levy in order to receive state funding, is 3.160 mils. It's proposed to generate $210,811,690. Our capital outlay millage, which is what we use for buildings and equipment, is 1.5 mils. That's set by the state. It's estimated to generate a little over 100 million. And it's interesting because last year that amount was 86 million. So it's about 20 million up from that. Our discretionary operating is 0.748 mils. That's also set by the state. It is estimated at almost 50 million. Our district tentative budget. This is included in your attachments. It's pretty small. It's designed to give the board and the public a first blush at our budget. Then we take any questions into consideration and we do our finishing refinements before we bring the final budget to the board on September 5th. So this first page will show you our student increases in both unweighted and weighted. It shows the comparisons between the second calculation, which is the tentative budget of 22-23 versus the second calculation for the tentative budget of 23-24. For those of you that are new, in case the DOE has 5 calculations per year. That's when they look at our student FTE based on the funding formulas, and they let us know in detail what our funding is. Those can be found on the DOE website. Significant changes this year is there was a funding compression allocation, which has been removed. They rolled several pieces into the base student allocation. I guess I should backtrack. Our student base allocation, which is the amount of funding received per student, has increased by $552 per student. They've also removed the district cost differential. It remains for smaller districts in which they provide a weight to help equalize things. But for most of the districts, we are now at a 1 ratio. We used to take a penalty because the cost of living in Polk County was assumed to be less than it is, for example, on the coastal counties. But most have been weighted at a weight of 1 now, so there's no longer that penalty. Back to the things that have changed. We had received funding about $2.4 million for turnaround services, those schools that aren't performing to their highest ability. That has now been rolled into a new, oops, if I can get it to highlight properly, the educational enrichment instruction. This amount has been rolled into here. This was formerly supplemental academic instruction. So as you can see, you can take a look at, this is 22-23, 23-24, and this column shows the variances, whether it be an increase or a decrease. Reading allocation, for these that you see the large decreases in, they have now been rolled into the base student allocation, which is this large amount here. So you'll see our weighted FTE multiplied by the base student allocation times the district cost differential, which is now 1. Our increase is 129 million. But out of that amount, these negatives have been rolled into that. So overall, it appears that we have an increase in total state FEFP of about 76 million. It's a little less than that when you start factoring in a few different variables. One being the rolling up of these, the other being charter school, We have to deduct our charter school amount, which is about 15% of our FEFP. We are a flow-through source for that funding. And then also the Family Empowerment Scholarship. Those are the student scholarships currently estimated to be at about 57 million. We have seen an increase in 1,000 students since the beginning of July for homeschool. So some of those homeschool students will elect to take this scholarship. And we're also continuing to monitor the numbers. I'll have more information by our next committee meeting to be able to tell you how many students we think will go from public school and elect the scholarship. And what that means is the funding goes with the student. So we no longer have the revenue associated with those students. We also will not have the expense. They'll be educated elsewhere. However, some of the students will elect to have public school services. For example, ESE students, we may provide speech and language therapy if they so choose. And we will, we are working through a method to determine how we will bill for that. And if it will be billed, or we're in consultation with the state with how other districts will be doing it. A lot of changes this year with our budget. This page shows our 22-23 adopted budget. That's the one we adopt in September versus our 23-24 tentative budget. We do have an error on the top of that page. Forgive us. So you'll see our beginning fund balance and revenues. Overall, we have 112 million, which is our total revenue plus beginning fund balance. Our estimated appropriations, we are $88 million higher this year, showing our ending fund balance is estimated. Our unassigned, which is what counts towards our fund balance calculation, estimated to be an increase of 24 million. So as of right now, our budgeted ending fund balance is projected to be at 5.68%. Worked into this budget, we have a couple changes this year. We are looking at an increase of $9.2 million for new teachers and teachers' salary increases that we budgeted. Workers' compensation, we have a $3.5 million increase this year. We have moved $3 million of learning support, i.e. ESE positions, from the IDEA grant to general fund. Those are positions that work with students that are eligible for Medicaid, so we can bill back for those services. However, if they are paid from IDEA, you can't do that. You can't seek that source of revenue. You're kind of double dipping. So by moving those positions, we are reallocating IDEA funds to those services, and then it will be an increase to the general fund initially, but within a year we should see that work through. Medicaid billing is about 6 months behind on our reimbursement, so we have a bit until we'll see those gains. We've done a reorganization in our IT department. That's about 189,000. We proposed a district level reorg, which is $2.5 million. That's to add some additional positions. Over the last probably 5 years, we haven't added a lot on the district side, but our students are increasing exponentially. And in order to support the schools, we have to have a little bit more support on our district side as well. School operating increases, we added to their, we give each school an allocation per FTE for their base operating funds. So we did increase that allocation, resulting in a $300,000 increase. Teacher supply classroom allocation, which is also known as teacher lead, formerly. Those are the dollars that the teachers receive through a vendor called Class Wallet. We give the money to Class Wallet. They open up an account for the teachers. The teachers can either purchase through their platform, or they can purchase at a vendor of their choice and then submit receipts for approved purchases. So that's 1.9, almost $2 million, because we no longer receive the appropriation for that. However, by statutory language, we still have to provide a minimum of $300 to those teachers. Property insurance has gone up $1.6 million this year. Property insurance all over Florida has seen an increase. The categoricals I mentioned that have been removed from specified funding, that's $32.2 million. And written into statute, we still have to support the language. Like we have to buy instructional materials. We have to provide increases per the teacher salary increase allocation. So all those categoricals that have been moved, we still have to provide what we were providing before. However, there's no longer specified funding. So we're still budgeting for those in the categorical lines so that we're able to track them. There's an increase in FRS of $9 million. New positions that were added between the approval of the 22-23 budget and 23-24 tentative budget equals $10 million. That's predominantly at the schools. We are setting aside $9 million for salary increases. That's pending union negotiations. And Align touched on the health insurance fund. You all saw the decrease in our fund balance of $7 million. So this year, the board is also contributing $100 per member per month, which totals $13.7 million. We have developed two committees. One is a wellness committee, one is an insurance committee. We're beginning to look at plan changes and design changes in order to mitigate these cost increases. We do not have an employee premium, so we're exploring something a local county, Osceola, has done. They've made some plan design changes that they've not had to increase their employee premium. They have added a step-up plan for additional services where you can pay. And then we're also looking at a lot of the other, we're one of the big 7 districts, so we're looking at the larger districts to see how they're addressing these challenges. I know that's a lot. Do you all have any questions so far?
Okay. Heather, just to clarify, everything you were just talking about, and we're not seeing these numbers anywhere, right?
No, ma'am. Those are things that we went over, and I can have Ms. Matthews send them out in a board. In June, we had a board workshop where we went over a lot of the potential changes. You see them, that's reflected in these numbers in summary, but we can send out those work session materials too. I'm just pulling from that, but I kind of thought it was important, since we discussed it with the board, to help you understand what's the tentative small and 13 pages about, to help you understand what was in it. I wanted to go into some more detail.
Okay. But a lot of what you were mentioning was probably grouped in school personnel allocations and.
Yes, ma'am.
Okay. I think we talked about this last year with the budget presentation. Is there ever an opportunity to add percentages for the variances on these reports from one year to the next?
Yes, ma'am. And I believe we added them to the final book, but we'll add them to the tentative as well going forward. I'll make it. Okay. The next couple pages will show you personnel allocations by school. So you can see the projected number of students, teachers. It's broken into category, and it will show you your totals. A section where what we're doing with our staffing allocations, we have a formula and a document that we provide that calculates based on the number of students, but we're moving to a site-based budget. So we have a pilot with, I think it's about 7 schools this year. And what we've done is we've calculated the amount of revenue that the FTE they have generates. And then we've given them recommended allocations to meet class size. And then those principals actually are making the decision for how they would like to staff their schools. So they work with we still have guidance from Title I, ESE, various departments, because we have specific needs that we have to provide for certain students. But we're moving into that, and our IT department is helping us develop a new database to track our allocations. And we're going to have some expanded reporting. This is good, but there's more that we could show that I would like to provide transparency. So this is one of the areas you'll see change as we fully move into that site-based model next year. And one piece that gets us thinking is custodians. You'll see 32. Well, that could be misleading. You would think Alta Vista Elementary may have 32 custodians. They don't. That's 32 hours. So that could be an 8-hour custodian, a 6-hour, a 4-hour, a 2-hour, depending on the types of employees they have at the school. But you can peruse those allocations, and they're broken up by elementary, middle, K-8, high, specialty type schools. Then we have our budget allocation by school. It'll show you the operating amount based on our funding formula, and operating facilities, so that we provide them with a small amount of capital outlay money for equipment. Predominantly all technology is provided. We provide that from a district base. We're moving to streamlining what schools get for their classroom furnishings and technology, and also going one-to-one, as Aline mentioned. There's not as great of a need for capital funding at the schools. So you can, again, that's broken up by school. You guys can take a look at it. Our technical centers, charter schools and contracted programs, we show you what their percent of our funding is. It's broken down in detail. That way you can see exactly what goes to each school. There's a charter school worksheet on DOE's website, which is how we determine that portion of funding. And then we have, for our departments, you can see budgeted positions for 23-24 versus 22-23 for administrative, non-administrative, total number of employees, and total salary and benefits by department. We also show you the operating budgets for those departments, same as we show you for the schools. Our tentative capital outlay budget. This page looks a lot different than it did last year. It's rolled up to a high level. Something different we've done is we've started a capital projects committee, and it is composed of all the superintendent, the deputy superintendents, all of the associate superintendents, athletics, music, career and technical, IT, and facilities, and then our budget and finance departments and procurement. And what we're doing is we're preparing our 5-year capital plan, local capital improvement, LCI, which is our 1.5 mils. This is the pot of money that's usually used for things like buses, computer systems, athletic equipment that qualifies to be purchased from here, various other pieces. And as an example, we only receive about, looks like we're going to get about 100 million in LCI this year. To build a new school, a new high school, it's 150 to 200 million. So we're taking note of our capital funding, and we're making it a unified decision. So now whenever a school or department has a request that's not in our 5-year capital plan, we have a format that they will fill out that request form. If it's a school, it goes through their regional to be pre-approved, and then it's brought to the committee. Departments go through myself or the chief academic officer, and then we will bring those requests, and then it will be decided upon as to, do we allocate any remaining budget to these areas. If we have an emergency, is there a need to push a project out in order to budget for it? So we're bringing awareness to our capital fund as well. So in the final budget, you'll see more detail in those sections. But I didn't want to include it yet because we have one more meeting to have in August before we have our everything nailed down for right this current second.
Heather, I think Doretha may have a question. I see her hand raised.
Yes, ma'am.
Yes, I did, but I didn't want to interrupt. Back on the spreadsheet where you were talking about the various school personnel, I saw a column that referred to, I think it was mental health, but I didn't see any numbers in there. And I was wondering, why was that listed if there weren't any numbers of staff to be allocated?
Let me go up there. Let me get there real quick. School psychologist and mental health. Because those, if you see here, behavior and mental health itinerants, they're down listed under the department areas. There's 119 in total. And what we've done is we've moved those under the management of the ESE department. So when we do that, they show under their cost center. And when budget runs the reporting, you'll see them listed under the departmental sections rather than in individual schools. So those individuals.
So no direct assignments to schools is what you're saying.
Correct. So like this one, ESE itinerants in schools, these 27 individuals will go to multiple schools to serve them.
Okay, thank you. I didn't want to interrupt you.
No, anytime. Thank you, ma'am. Back down to, and then the last 3 pages are just our, these are our trim, truth and millage ads. So I'm sorry, we do have information about what is a mill. Where I came from the state of West Virginia, and I worked for a state agency, and our agency did not levy taxes. So it took me a little bit of time to understand what a mill was because I didn't have familiarity until 10 years ago when I got to Florida. So this sheet just kind of explains a little bit about what a mill is, how you calculate it, the different types of millage we have to help you understand. We have our breakdown of our current millages in comparison. And oftentimes, one important thing to note is you can see that our millage in a total has gone from 5.519 to 5.408, which is a decrease, but we're still generating more revenue. So the Department of Education has a formula that they work out. And because our property values have gone up, they actually look at statewide and they adjust our rate down. There's something called a rollback rate, and that rate would generate the exact same amount of revenue that we had in a prior year. So when your property values go up, they roll the millage down. And if we had gone as far as the rollback rate, I'll show you what that looks like in a second. It will generate exactly what we had previously, but they come a little bit higher than the rollback rate, but not as high as leaving it at the current. So that's how they adjust our millage rate. We do still have an increase, but it's not as high as it could be if they would leave our millage rate. And then the last page is just a budget summary ad. It will change between this and the final, but we have to provide a tentative for our tentative plan. And then our proposed tax levy is another ad. A portion of the tax levy is required under state law. That's our required local effort. This is the amount in state education grants or FEFP that we get in total. And we have to levy that millage to be eligible to receive this. And an interesting statutory requirement. You have to say that the required portion has increased by 7.5% and represents 6/10 of the proposed tax. If you leave that off, you could be in danger of not receiving your funding. It's a very prescribed formula. And then for our LCI that we've talked a lot about, the 1.5 mils, we have to run an ad that shows how much we think we're going to get. It's 96% of our estimated amount. 1.5 mils times our current gross taxable value, which is $69.5 billion. And then we list everything that we're going to spend it on. It has to be listed in this ad in order for us to pay for it. So, for example, we'll list how many buses we're going to buy each year, and you have to have that listed, but you're not required to purchase as many as you have in the ad. Also new this year, charter schools are eligible to receive a portion of our LCI. They were not previously, so they're located. They have a section assigned to them in our ad. And then the last piece. So when I talked about required local effort and rollback rate, this is also attached to our board work, and Mrs. Matthews sent it out, but it'll show you, this is a form DR 420S that we send to the Department of Revenue. It shows our current taxable value. It'll show our prior year millage, what our rollback rate would be, and that would be the amount to generate the exact same amount of revenue we had last year. Again, riveting, very entertaining, but one of the required forms we have to submit. That's all I have for you today. Do y'all have any more questions?
Does anybody need to get up and stretch, move around? Well, I appreciate you guys sharing that update. Very informative. I will say kudos to Mr. Nunez and the team for adding those that information that we'd requested easier to consume, we'll say, and thank you for everybody in the committee for making those suggestions. So again, thank you to you guys for putting that up there. It's very good. All right. Well, there's no questions. We'll move forward to the internal audit update.
Thank you, Travis. I'm going to share my screen. Can you see it? Okay. So the first thing that we'll talk about is school audits and investigations. These are unanticipated demands on the internal audit department. They come up periodically, and we just work them in around our routine audits. And so this particular one is at the East Area Adult School. Human Resource Services requested that we audit the school's special activity payroll. This is outside of their normal job. So special activity payroll in this case was primarily teaching and testing in the adult ed night classes. Employees submit a time log, and the school secretary posts the time to SAP, or if the employee is not assigned to the cost center on a normal employee basis, then she would submit that to payroll for input for the employees assigned to another school. So our findings were that teachers were paid when the school was closed for a hurricane. Teachers were paid when a substitute worked in their absence. They were paid for more hours than documented on time logs, and they were paid twice. Some were paid twice for the same hours. All in all, it resulted in 11 employees were overpaid a little over $7,000. So we reported our findings to HR, and then they will look into it and take action with regard to discipline or restitution if that's appropriate. Then we had McLaughlin Middle School. You'll remember last quarter that we reported on a routine payroll audit of McLaughlin Middle School. And we had so many findings that because our audit is based on a sample basis, we recommended that the school do a self-audit back to the beginning of the year. They did that, and they found discrepancies that resulted in over 1,100 hours of unrecorded absences, 24 hours of additional time worked by employees that was not posted and paid, and it affected 55 employees. When the self-audit corrections were made and submitted to internal audit for verification, we found that only about 30% had been corrected, and there were several posting errors in making those corrections. So we advised the principal to consult with HR for any disciplinary action or reassignment of duties, because it just seemed like in this case, training was not being effective, I guess would be a good way to put it. This particular employee had more than an average or typical amount of training in a variety of ways, and still just wasn't able to really successfully do the job. So that's where we landed on that. Any questions about those two investigations? Okay. So then I will turn it over to Davina to talk to you about routine payroll audits that we did this last quarter.
Okay, so this past quarter, we completed the following payroll audits: Daniel Jenkins Academy, Rochelle School of the Arts, Combi Academy, and Westwood Middle School. The following schools had atypical findings. Daniel Jenkins Academy had 91% of the school posting to SAP for leave and overtime was not approved by the principal. Payroll entries were posted incorrectly to SAP for 8 employees as a result of incorrect time calculations. Example, 1 hour and 45 minutes was posted to SAP as 1.45 instead of 1.75 hours, resulting in incorrect pay or leave. Paraeducators, non-exempt employees, did not document time worked, and none of the custodial time cards were signed by the principal. For Combi Academy, an employee was overpaid 20 hours due to posting errors by the payroll secretary. And Westwood Middle School, the school had more than the typical number and severity of findings. 87% of the school posting to SAP for leave and overtime was not approved by the principal. Many timesheets and leave forms were not approved by the principal. We also found unrecorded absences for 3 employees, and payroll entries were posted incorrectly for 14 employees due to incorrect time calculations. And paraeducators, non-exempt employees, did not document time worked.
Thank you, Davina. Any questions on those?
I don't necessarily have a question, but more of a statement. So in that, we had mentioned that there were 4 schools that were audited. Mm-hmm. Am I to believe that Rochelle didn't have any findings?
No. What we do is we say, there's typical findings that you find at every school. And if there's something out of the norm, then we kind of highlight those. But they definitely had findings, definitely got a report, had to respond. But it was more,
but nothing atypical.
Right. You had some posting errors. You might have had some leave form issues, but it wasn't anything egregious or really out of the norm.
But that's still a positive.
I know. But actually, I do have a school in my basket right now. We're not reporting on it because it's not completed, and these are completed projects that Davina's worked up, and she says she found no findings. So that may be a first.
Yeah, go ahead and start preparing an award for them.
Right? That's what I said. Any other questions or comments? Okay, and the last thing we'll talk about then is inventory. Annually, Inventories are conducted at the different warehouses, physical inventories, and we oversee the process. Inventories consist of consumable supplies held for consumption in the course of district operations. The combined total of all inventories at June 30th of 2023 was $10,776. And we broke it down for you into the different types. We have a maintenance warehouse. We have different maintenance shops throughout the county. We have an electronic equipment repair services warehouse. We have a school supplies warehouse. Food is stored at the warehouse. Support services, which is transportation. They have shops throughout the county. And then we have a custodial warehouse. And those are the amounts that are held at each of those places. So a full inventory count is performed at each location at year end. And some shops also conduct cycle counts during the year. We include all count adjustments in our analysis, and we analyze the adjustments that were necessary to reconcile the reported count on SAP to the actual items on hand at the time of the inventory. And we ask management to submit a written response for any adjustments that are greater than 0.5%, 0.5%. The following inventories had adjustments that were greater than 0.5%. The school supply warehouse, they adjusted 472 items, a net increase of $11,876, which represented 1.11%. And management's response noted personnel turnover contributed to the above average variance, and that they wrote in their report that they have a new team in place and their confident processes will improve. For support services, 206 items were adjusted, a net decrease of $3,257, which represented a minus 0.49%, just under that 0.5% threshold. But it's separated into shops, and so one of the shops had above that 0.5%. They adjusted 75 items, a net decrease of $1,616 or minus 1.1%. So management researched the reasons and just basically came up with human error as the reason. And they are going to increase training to improve the process. Custodial services had 42 items adjusted, a net decrease of $9,818 or minus 2.14%. They too found human error. I guess I failed to put that in here, but they research the reasons and they try to nail those down and shore up those weaknesses so that that doesn't happen again. Obsolete inventory in a couple of areas, EERS and school supplies, was properly written off and taken to the school board for approval. And that's all I have. Any questions or comments?
All right. Thank you, Carol. That being said, we're coming up to the public comment section of our agenda. We will hold for any public comment, should there be any. Any Jeopardy music? Hearing none, we'll look at the next agenda item. We're going to set the next meeting date for Tuesday, November 7th. Does anyone have any issue with that date? Fabulous. That means everybody's going to be there. So again, I appreciate everyone for their time today. I know everybody's busy, so appreciate you being here and your commitment to the committee. With that being said, we'll adjourn. Appreciate everybody being here. Thank you so much.
Thank you.
Thank you.